Just this week, the official spot price for silver hovered around $30, but what nobody's telling you is that this number is a complete fantasy. The real price, the one you pay to actually get physical silver in your hand, has quietly disconnected. For the third time this year, a major discrepancy has appeared between the paper price and the physical price, and this time, it's not correcting. We are watching right now as the true value of silver decouples from the manipulated financial markets. The real price of silver, accounting for inflation since 1980, is not $30. It's $63.79. And the system is just weeks away from being forced to acknowledge this. Let me show you what's really happening. To understand what's unfolding, you have to look past the headlines. The mainstream media talks about silver as just another commodity, like corn or oil. They're missing the entire point. For 5,000 years, silver has been money. The paper silver market, traded on exchanges like the COMEX, is where the price is set. But there's a problem. For every 1 ounce of real physical silver that supposedly exists in their vaults, they have sold hundreds of paper claims against it. It's a massive game of musical chairs, and the music is about to stop. The key context everyone misses is the 1980 peak. Back then, silver hit nearly $50 an ounce. According to the U.S. Bureau of Labor Statistics' own inflation calculator, those $50 in January 1980 have the same buying power as over $185 today. So why is silver at 30? The answer is suppression. But the system is breaking. Now, I know what you're thinking. People have been saying this for years, and you're right. But what's different now is the data. The proof is undeniable, and it's happening as we speak. Let me show you the numbers. According to the Silver Institute's own 2024 report, we are now in the 4th consecutive year of a massive silver supply deficit. That means the world is using far more silver than it is mining and recycling. In 2023 alone, the deficit was a staggering 184.3 million ounces. This isn't a projection. This is a historical fact. The deficits are accelerating, not slowing down. But here's the terrifying part. It's not just about the supply deficit. It's about where the physical silver is going. The inventory at the COMEX, the supposed bedrock of the paper market, is evaporating. At the start of 2021, registered silver inventories, that's the silver actually available for delivery, stood at over 150 million ounces. As of this month, that number has collapsed by over 75%. We are down to less than 40 million ounces of registered silver. This is the part the financial news won't tell you. They talk about the total inventory, but most of that is eligible silver, which isn't for sale. The actual sellable stock is nearly gone. Here's where it gets even more alarming. Look at the demand side. Industrial demand for silver is exploding. It's essential for solar panels, electric vehicles, and all things AI. The photovoltaic sector alone consumed 193.5 million ounces in 2023. Up 64% from the year before. That one industry is consuming more silver than the entire annual supply deficit. Translation? The green energy revolution is literally eating all the available silver. And that's before we even talk about investment demand from people waking up to this reality. So what does this all mean? Let's connect the dots that the mainstream refuses to see. You have a record supply deficit for the 4th year in a row. You have industrial demand, driven by government mandates, that is non-negotiable and growing exponentially. And you have the physical inventory at the center of the paper price scheme collapsing to crisis levels. This isn't a market imbalance. This is a system under extreme stress, on the verge of snapping. The paper price you see on your screen is a lie, held in place by a dwindling pile of physical metal that is being drained by the day. The price is set by paper contracts that can be created out of thin air. But a solar panel needs real physical silver. That's the conflict that's coming to a head right now. Let me paint the scenario for what happens next. It won't be a gradual climb. It will be a sudden repricing event. It starts when a major industrial consumer, like a solar panel manufacturer or a large nation-state, tries to take delivery of a massive order from the COMEX and is told, sorry, we don't have it. It's called a force majeure. That single event will expose the fraud of the paper market to the entire world. The confidence in paper silver will evaporate overnight. At that moment, the price will no longer be set by paper contracts. It will be set by people trying to get their hands on the last remaining physical ounces. The price won't just go to $40 or $50. It will immediately seek its true inflation-adjusted value. First, it will pass the 63.79 mark, which is the inflation-adjusted equivalent of its 1974 price. Then, it will target the inflation-adjusted 1980 high of over $185. We're not talking about a 10% gain. We're talking about a 500% or more revaluation, happening not in years, but in weeks or months. Your access to it will be gone. Dealers will be sold out. Premiums will be astronomical. This isn't about predicting the future with a crystal ball. This is about recognizing a mathematical and physical certainty. When demand consistently and dramatically outstrips supply and the inventory buffer is gone, A price explosion is not a possibility. It is an inevitability. So here's the bottom line. We are in the final months, maybe even weeks, of the fake paper price regime for silver. The physical reality of a massive multi-year deficit is about to overwhelm the financial fantasy. You have a binary choice. Either you see this pattern and position yourself before the dam breaks, or you learn about it on the nightly news when it's already too late. If you think this is important, you need to see what's happening in the gold market, because the exact same forces are at play, but on an even bigger scale. In my next video, I'll show you the classified data from the Shanghai Gold Exchange that proves Eastern central banks are preparing for this exact scenario. Subscribe now and hit the bell so you don't miss that critical update. Thanks for watching.